All right, ready to dive in. We're tackling BGC partners today. Well, technically BGC Group now, right?
Mhm.
We've got the recent 10Ks. And let me tell you, these things are dense. But they're kind of like a crash course in, well, in a company totally transforming itself.
It's wild how BGC is trying to, redefine what it even is. They're the brokerage guys, right? The middlemen in all these financial deals. But these filings, total tech push, especially with this Phoenix platform of theirs.
Yeah, it's like they're not just hopping on the tech wave, they're building the surfboard. But for those of us who aren't, finance wizards, what is Phoenix? And why is BGC so hyped about it?
So Phoenix, it's basically their whole suite of trading tools, workflow solutions. Think of it as the engine behind how markets actually work these days. BGC calls it their leading wholesale FX hedging platform, and they're psyched about the strong growth they're seeing there.
Okay, so less picking up the phone, more algorithms doing the trading.
Exactly. And it's not just software. They're buying up companies too. Potent Partners, that's shipping. Jinga Petroleum, energy sector.
Kind of random for a finance company, no? Or is there a theme I'm missing?
Not random at all. These are calculated moves, those industries, ripe for tech to disrupt them. BGC saying, we've got the skills, let's shake things up. They even talk about using their global infrastructure, software systems. Heck, they're a whole portfolio of intellectual property to give their software business a boost.
So it's like they're building a whole tech-powered financial empire.
Yeah.
Ecosystem, maybe. But isn't this world crazy competitive?
Oh, absolutely. BGC knows it too. They say it right in the filings. Competition is fierce, especially from the big digital trading platforms at CME, TradeWeb. Those are the giants.
David versus Goliath situation then, huh? How can they even compete?
Well, for one, they're using the disruptor as their strategy, technology. Their 2022 filing actually says that embracing tech has historically meant higher margins and greater profits. For everyone involved, really.
So tech equals more money makes sense. But they're also walking a tightrope, aren't they? All the financial rules and regulations.
Oh, totally a balancing act. Got to be cutting edge, but also follow the rules. And those rules, constantly changing. We're talking MiFID II in Europe, Dodd-Frank here in the US. It's all about preventing reckless risks, protecting investors.
And just so our listeners clear, those regulations can get really complicated. Like MiFID II changes how BGC interacts with their clients, executes trades, even the reporting side of things.
It's a lot. And then on top of all that, you've got the ever-present cyber threat. They mention cybersecurity as a major concern, which, duh, they're dealing with sensitive financial data. One breach could be devastating.
So cutthroat competition, ever-changing rules, and the threat of hackers lurking around every corner. Why even bother trying to change things?
It's a good question. I think the answer's in their strategy. Remember how we were talking about their tech focus? This isn't just about keeping up. It's about shaping the future of finance.
Sounds like they don't want to just play the game, they want to design it.
Right, and that ambition. It shows in how they're moving beyond traditional finance. They're even dipping their toes into cryptocurrency.
Now that's interesting. What do they say about crypto in the filings? Going all in or just testing it out?
They're being smart about it, acknowledging the risks. Digital assets are volatile. Nobody can deny that.
So they know it's risky, but they're still intrigued. Trying to find that sweet spot, right? Embrace the potential of the tech, but be realistic about the dangers.
Exactly. It's high risk, high reward. And they are not afraid to make bold moves.
Okay, so we've got BGC ditching the old school image, going all in on tech, navigating a minefield of challenges, but there's one more thing we got to talk about. Cantor Fitzgerald.
Oh, yes, the Cantor connection. Now, this is where things get interesting. This isn't just like two companies being buddies. BGC and Cantor, they're practically joined at the hip. Cantor actually owns a huge chunk of BGC's stock, like 88% of their Class B common stock. That's majority voting power right there.
Whoa, 88%. So Cantor basically calls the shots at BGC.
Pretty much. And get this, Howard Lutnick, the CEO of Cantor. He's also the chairman and CEO of BGC.
Two hats, one very powerful guy. Doesn't that seem a little, I don't know, risky?
It's definitely something investors keep an eye on. Even if BGC admits, right in the 10Ks, there could be conflicts of interest. Cantor's goals might not always be what's best for other BGC shareholders.
Hold on. So decisions could be made that benefit Cantor, even if it's not the best move for BGC as a whole.
That's the worry. And they even say their deals with Cantor may be less favorable than what they could get elsewhere. Like they've got these service agreements, right? BGC pays Cantor for admin support, that kind of thing. Could be inflated prices compared to the open market.
Ah, so it's like getting your car fixed by your brother-in-law. Might get a discount, might get ripped off.
Exactly. And remember that lawsuit. The one claiming Cantor got an unfair advantage during BGC's corporate switcheroo. Don't need to get into the legal weeds, but it proves there can be tension between Cantor's interests and everyone else's.
Okay, yeah, the Cantor connection is definitely something to watch. Not a deal breaker on its own, but as a whole other layer to things. Speaking of layers, let's talk about how BGC pays its people. Their compensation is wild.
Wild's one word for it. They're big on equity, especially for the bigwigs, like tying their pay directly to how well the company does.
So we succeed together kind of deal.
Exactly. The 2022 filing says employees, partners, the whole lot own like 17% of the company.
Serious ownership, wow. And it's not just stock options, right? What are these LPUs and RSUs I keep seeing?
Ah, the joys of financial jargon. LPUs are limited partnership units.
Yeah.
RSUs, those are restricted stock units. Basically, ways to give employees ownership little by little, usually tied to hitting goals or sticking around.
Golden handcuffs, but made of stock certificates.
Pretty much. It's a long game, just like their tech strategy. They're building something, not just going for quick cash.
Smart. So employees do well if BGC does well. What about regular investors, though? How are they getting rewarded?
That's another place they're switching things up. Less about dividends, more about buybacks these days.
Buybacks.
Yeah.
ELI5. What does that even mean for the average Joe with BGC stock?
So dividends are like a little bonus payment for owning stock. Buybacks, though, that's when BGC buys its own stock back from the market.
And that's good because
Supply and demand, baby. Fewer shares available, the ones that are left become more valuable.
so instead of a few bucks in dividends, investors might see their BGC stock price go up.
You got it. Shows BGC is confident, thinks their stock is undervalued right now, so they're buying. Rewarding the long-term players.
Bold move. So we've got tech ambitions, tricky connections, unique ways of paying people. But we've also talked about how tough it is out there. Competition, the rules, Cantor looming in the background. What's the future look like for BGC? Are they aiming too high, or is this actually going to work out?
The million-dollar question, honestly. Jury's still out. But their filings show their laser focus on a few things.
They're all in on Phoenix, that's clear. Plus, expanding into these new markets like shipping, energy, even some crypto stuff happening.
Not afraid to shake things up, that's for sure. Betting big on their ability to, outmaneuver the competition with tech.
High risk, high reward. And speaking of rewards, we can't forget about that compensation structure. Lots of equity involved, right?
Yeah, like I said, we're in this together. Tying employee pay directly to how the company does can be really motivating.
Double-edged sword, though. Remember those LPU and RSU things? Complicated payout stuff.
For sure. Creates this whole dynamic, employee incentives versus shareholder interests. Not always the same thing.
Something to keep an eye on as BGC evolves. So for our listener, what's the takeaway here? If they only remember one thing about BGC after this deep dive, what should it be?
Yeah, GGC. They've got this bold vision, like really bold, for the future of finance. Big bets, new tech, not afraid to turn things upside down.
But a ton of challenges, too. Huge competition out there. Rules changing constantly. And then there's, well, Cantor Fitzgerald always kind of lurking.
All factors for sure. But the big question is, can they actually pull it off? Can they execute this vision, dodge the obstacles, prove they're more than just another brokerage trying to stay relevant?
They want to be the ones making the trends, not chasing them. It's a wild story, got to give them that. And these 10Ks, those were eye-opening.
Total glimpse behind the curtain, how they're thinking strategically, the risks they see, the opportunities, how they plan on making money for their investors.
Okay, so wrapping things up here. BGC, big changes happening. Will they actually become this tech-powered finance giant? Or will they trip up on their own ambition?
Time will tell, but it'll be fun to watch, that's for sure.
Well said. And on that note, that's our deep dive into BGC partners. We covered it all, huh?
Yeah.
Tech, the acquisitions, the Cantor situation, how they pay their people.
The good, the bad, the potentially ugly. Hopefully gave our listeners some food for thought.
Exactly. Investing is all about those risks and rewards, right? And with BGC, you've got both in spades.
Until next time, everyone, keep learning, keep digging, and keep that skeptical mind sharp.